Hey everyone, it's Prashant here. Welcome to my YouTube channel and thank you for joining me in today's video. Today we're going to be talking about whether it's a good idea to buy a house in 2021. Let's dive in. As we all know, 2020 was a wild year. We saw a lot of people lose their jobs, have rent freezes and mortgage forbearances. On the other hand, we saw millions of people start working from home, thus reducing their travel costs and not being able to go out and spend money on retail and restaurants as much, thus saving their money. When it comes to real estate, we saw extremely low inventory in the market as well as very low interest rates month after month. This caused housing prices to go higher and higher as people got more comfortable paying above asking price since the monthly cost to them was actually quite low. Since it is now 2021, I thought it was a good idea to make a video talking about my thoughts on whether it is better to buy a house in 2021 or just rent. Guys, before we continue with this video, I want to take a second to ask you to please hit that like button and that subscribe button. This helps me out a lot with the YouTube algorithm and motivates me to keep making these videos. That being said, let's get back to today's video. The question of whether it is better to own your home or to rent one is a recurring one with good arguments on both sides of the topic. However, this is a question where I think I can make a definitive statement about which I think is the better choice. After all, for most people, housing is their biggest expense, so it makes sense that we should have a detailed discussion and make sure that the decision we make is the correct decision for each and every one of us. This decision is one of the most important decisions that we can make on our personal finance journey. Owning a home is the way that Americans have been building generational wealth for centuries, and there is good reason behind that. You see, when you pay rent, that is money that you'll never see again. However, if you pay a monthly mortgage, a portion of each mortgage payment goes into equity, money that is ultimately yours. Let me make it clear, renting is very important, both for individuals as well as the economy as a whole. Renting is important for both renters as well as landlords. It matches people who need housing with those who can provide it, which is a very important thing. That being said, you should give serious consideration to owning your own home as soon as you're able. In fact, you should make a plan towards home ownership far before you can actually afford it and start building towards that point. Now let me tell you 10 advantages of owning your home instead of renting it. Number 1, save cash. Let me use an example. Let's say you're looking for housing in Chicago. I'm going to use 2021 prices for a 2-bedroom, 1-bathroom home in this area. Rent for such a place can be about $1,500 a month, whereas a mortgage payment can be only $1,200 a month. Now granted, this payment is pretty low because we are still seeing historically low interest rates in this market. But the concept holds true even at significantly higher interest rates. So let's talk about it. First, let's consider renting. The monthly rent, like we talked about, is $1,500. So the yearly rent is $1,500 times 12, which is $18,000. Now let's consider ownership. The monthly mortgage is about $1,200, which includes principal, interest, taxes, as well as homeowner's insurance. So the yearly cost is $1,200 times 12, which is $14,400. Now let's add maintenance costs over the year of another $2,000 to make it $16,400 for the year. Think of that for a minute. It costs you $1,600 less to own such a house than to rent it. If you invest this $1,600 at an 8% rate of interest in the stock market for 30 years, you will have $147,000. That's crazy. So you see, owning your home will save you a lot of money over the long term, not to mention that at the end of the long term, you will be the proud owner of a house, free and clear. Number 2, building equity. When you pay rent, you're giving your landlord money in exchange for them allowing you to live in their home. When you pay a mortgage, a portion of that mortgage goes to the bank as interest for giving you the loan. The second portion goes towards equity or principal paydown, which is basically your money. If you ended up selling the house at some point in the future, that is money that will ultimately come back to you. Let me go back to our example. In our first scenario, when we're renting, if we paid $1,500 per month in rent or $18,000 of the year, at the end of the year, you don't get any of those $18,000 back. At the end of the year, your equity or your remaining money is $0. In the second scenario, when you own your home, where your yearly cost of owning the home was calculated to be $16,400, let's say part of that goes towards equity, and let's say that that number is about $3,700. So your net cost is actually $16,400 minus $3,700, which is $12,700. So you see, just over the first year, you'll save $5,300 if you own this house rather than just rented it. Number 3, appreciation. On average, over the last 25 years, home prices in America have risen by about 4% annually. This is called appreciation. This number varies. In some areas and cities, the rate of appreciation is much higher, whereas in other areas, it is much lower. So, for example, if you bought this house for $250,000, in just 1 year, the price of this house could rise to $259,750. So in just 1 year, you could make an extra $9,750. Number 4, potential tax benefits. When you buy a home, the interest that you pay on your mortgage can be deducted for your income. For example, if you make $50,000 a year and you pay $10,000 in mortgage interest, you can actually deduct that income and then be taxed as if you're only making $40,000 a year. Not only that, when you sell the home, if you make any profit on the sale, this is called capital gains. The first $250,000 of profit if you're single, or the first $500,000 of profit if you're a married couple, are not taxed when it's a real estate transaction. Even if your profits are higher than these amounts, you can do what is called a 1031 exchange if you buy a similar investment of a higher value. These are all ways that the government uses to incentivize you to buy your own home. Number 5, credit scores. In my very first video on this channel, I talked about credit scores and I explained how to improve your credit score. Part of that is having different types of credit, have a long credit history, and most importantly, making your payments on time. If you have a mortgage that you're responsibly paying off, this will give your credit score a huge boost, and you can actually have a credit score of over 800 just like I do. This will make lenders more likely to approve you in the future for credit cards, auto loans, or mortgages in the future, helping you build your wealth even more. Number 6, reliable payments. When you get a 30-year fixed rate mortgage, your payment is set. Barring any property rate increases, your payment can never go up. On the other hand, if you're renting, your landlord might increase your rent by 5% a year, and the only real choices you have is either to pay that or to move and find other housing. However, once you finalize the mortgage, the bank can never increase your payment. And as you grow older and your income naturally increases, it will become much easier for you to pay the same mortgage payment just because you're making more money. Number 7, reliable housing. When you're renting, you're at the mercy of your landlord. Your landlord can increase your rent to a point that you might not want to pay. Or he might ask you to simply move out because he wants to sell the place or move in himself. On the other hand, when you own your house, as long as you're making your mortgage payments and your tax payments on time, nobody can make you move out of that house. Number 8, government support. The year 2020 is the perfect example to show that the government really wants to help homeowners. As soon as the lockdown started going in and people started losing their jobs, there was great worry that homeowners will not be able to make their mortgage payments and will be foreclosed on. However, Congress passed the CARES Act immediately to make sure that homeowners could go into mortgage forbearances, could not be foreclosed on, and without even a hit to their credit scores. This goes to show that the government has been and probably will be willing to help out homeowners when it comes to times of financial crises. Number 9, build generational wealth. There is an argument that the money that you use to own a home can be better spent to buy other things, such as experiences, fancy watches, or whatever else it is that people like. Now here's the thing. In my opinion, everybody needs a place to live, no matter who they are or where they are. On top of this, people have been using real estate to build generational wealth for centuries around the world. All around the world, land used to be traditionally held by a few people, including kings and nobles, whereas everybody else used to farm on these lands and work for the kings and nobles. However, when societies changed and land ownership was made possible for regular people, it is only then that societies were able to pick these people out of poverty. And over time, people were able to work hard, buy real estate, and then transfer this real estate to their children, and so on and so forth. So it just goes to show that owning your own home and other real estate and transferring that to your children has been the oldest and most stable way of building generational wealth. Number 10, pride and satisfaction. The final advantage of home ownership is more emotional rather than financial. This is an advantage, you guys, that cannot be put into numbers. Home ownership has long been part of the American dream, and people have derived a sense of pride from this for a very long time. That feeling you get when you buy your first home and walk in is priceless. When I bought my first home and moved in, it gave me a sense of great satisfaction and just a feeling of being an adult. It gave me affirmation that the world thought of me as a responsible adult who is capable of managing his credit and taking care of my home. Growing up, I remember seeing how important it was for my parents to own their own home and how much they enjoyed being homeowners, and I wanted the same for myself. So you see, the many advantages of home ownership hold true in every year, including 2021. To add to this, the Fed has indicated that it intends to keep the benchmark interest rate low for years to come, which may lead to low mortgage interest rates, allowing people to lock in low interest rates for years to come. On top of this, because interest rates are so low, people are not able to make any meaningful interest in money that they have sitting in savings accounts. In fact, because of inflation, they might actually end up losing money. This might incentivize people even more to use the money that they have saved up for a down payment and finally go ahead and buy their first home. That's all I have for you guys in today's video. I really hope that you found this video entertaining and useful. If you did, please hit the like button and that subscribe button, and also hit the bell icon to be notified instantly when I post a new video. I post at least one video every week with great new financial content, and I would love to see you guys back on this channel. Also, go ahead and follow me on Instagram and Twitter. I will leave the handles down in the description below. Thank you so much for watching, and see you next time.